at the end of the day, people is only part of the equation. Having systems and tools in place that really help you is key.
We all want to scale fast, to say the least, right? We're wondering how to do that. You see somebody else that's done it. You just ask them, how did you scale so fast? I hear it all the time personally. Well, our guest today has also done just that. And he did 1,000 units while working a day job as well. That's not very common. But I tell you what, some skills that he has that he's going to share with us today are around systems and scaling and the technology that he uses. He's a tech guy, but he's going to share some of those systems and the tech that he's used to scale that's helped him, even some meeting agenda type things that are so helpful when you're getting started. That's something that seems so hard to figure out at times, but man, when somebody's already been there and done that and they can just share, hey, this is what works for us, it's going to save you so much time moving forward. But our guest today, Brett Bowman, he's the co-founder of Suncrest Capital, vertically integrated operator of 20 mobile home communities with over 1,000 units under management. With background in high tech and corporate finance, he enjoys using technology and financial analysis to create dramatic scale. And he's done just that. He's going to share some great tips with you on how he's done it today on the Real Estate Syndication Show. Brett, welcome to the show. Man, everybody is asking me, man, how do you scale fast, right? Everybody wants to get there as fast as possible, right? And you seem to have figured some of that out. I mean, you have moved fast. No doubt it didn't happen without a lot of work and possible a lot of pain points, right? That have steered you one direction or the other. But I'm looking forward to getting into that today. Brett, give the listeners a little more about who you are, maybe your focus in real estate, and let's dive in.
For sure. Thanks, Whitney. Fun to be on your show. I appreciate it. Yeah, and absolutely, still figuring out some of that skill, but we've learned a ton as we've gone. So quick background on me, I've got a background in corporate finance and have worked in tech for the last decade or so. And so really for me, I really am very passionate about building systems and operations that scale and making sure that we're being as efficient with our time as possible. So I got into real estate investing a few years back, but particularly started syndicating about 3 or 4 years ago. And the way I got into it was started as a limited partner, and then I kind of stepped in with one of the sponsors I had been an investor with. I asked, hey, can I come on your team and just kind of be a mentee and learn a little bit with you? What I did was I offered up my skills of underwriting and acquisitions, having, again, coming from that corporate finance background. That's kind of a rarity in this space, having people that are strong with underwriting. So I did that with one sponsor and ended up branching out with 2 others. So I had 3 sponsors at the same time that I was kind of just underwriting for and learning, and got to know a lot about the syndication process and various asset classes, including multifamily, industrial, and retail. And then my business partner and I, we actually live in the same neighborhood. Kind of serendipitously were introduced to each other, and he had already been investing in mobile home parks, just him and his wife. So he and I bought one together. And then after that, I said, hey, this is a pretty cool business model with mobile home communities. And I know syndication. How about we merge the 2 together and make this work? And so here we're a couple years later, and that's been working out really well for us.
Nice. That's interesting. I mean, it's great. Your background, I always love highlighting how somebody gets started and it really goes through some, I think the willingness, right, to step out, you talk to other sponsors, use your skill set, which they needed, right, and was offered to work for them. I think you said you started underwriting for 3 other sponsors. No doubt you learned a lot, right? I mean, from those sponsors, you were willing to go out there and do that. Were those paid positions, or were you doing that for free, or what did that look like?
No, I didn't get any salary from any of those. Most of those were volunteer, but from 2 of the sponsors, I got some small, general partnership shares as kind of compensation for my time in there, which was good. But honestly, I would have done it for free. Just learning is massive in this business, and being able to learn from various people. Everybody does it a little bit differently. So being able to learn was just crucial for me.
Yeah. Now, I love just highlighting that because most are not willing to do just that, right? I mean, to step out and say, hey, I'll work for free if you'll just let me help you and you give me some feedback and give me some education, right? And so everybody thinks, oh, no, my time is so valuable. Well, really, it's not, right, to that operator, because they're having to invest into you, right? And then, you worked hard, though. You provided value to them. And thankfully, like you said, a couple of them did, add you to some deals or however you all figured that out. But either way, you did get some compensation too. But I think even more importantly, you learn skills that, man, it's going to help you the rest of your career, right, in this
Absolutely.
business. So no doubt that was so worth being able to do that. All right. So you love systems, you love operations, and I as well. I love those things. Would you say, visionary integrator, you're more integrator than you are visionary?
This is funny. Literally just the other day, my partner and I took the visionary integrator test, and both of us came out slightly visionaries, which is not great. Obviously, it'd be nice if one of us is obviously an integrator, obviously a visionary. Through my career, I've done both roles, so I can pretend to be an integrator really well, but I can't be a visionary at the same time. And I've learned that over the last couple of years that it's hard to do both, even if you can do each role. So definitely more on the visionary side.
Yeah, no, that's interesting. I just wondered, since you love the systems and operations, because they're both very important, right? Especially, yeah. So let's talk about, how you got into this. You talked about how you got into the business, but let's talk about scaling a little bit. And, you met your partner, you all partnered on a project, and it's like, okay, like this business model. Hey, let's move forward. You had complementary skill sets, which you alluded to, sounded like. And then let's talk about some of the next steps you took, or the systems that started to come into place, or the pain points really that brought them about.
Sure. Yeah. So I am a huge fan of partnership models. So Ryan Hill is my business partner. He and I teamed up a couple of years ago, like I said, never really looked back here. And he and I have different skill sets and different passions. So we complement each other pretty well. Even though, again, we're both visionaries, we could use a little bit of an integrator helping us out. But we both, when we started for the first couple of years, we were both full-time day jobs. And I still have a day job. He was recently able to retire from his full-time job, as he was an elementary school principal. So his last day was just a couple weeks ago. So he's full-time now focused, which has been awesome. But, through that, I think it's been extra important for us to build the systems and the team in place. And, when you're full-time yourself, you can jump in and there's a lot of grace you have because you can do the sweat equity yourself. For me, for example, I've got, 6 kids and I've got a full-time job. And so this has kind of been something that I've been scaling on the side. And so some of those systems we've brought into place is we've been hiring employees over the last few years. So we've got 5 employees. We've got some 1099 contractors to do a lot with us. We have some amazing virtual assistants we work with that really, frankly, we got lucky with some of the VA teams we found that have just been super skilled and can do a lot of the work we need. But at the end of the day, people is only part of the equation. Having systems and tools in place that really help you is key. So you brought up traction. I'm sorry, you brought up rocket fuel, actually, right? Gino Wicken's Rocket Fuel with the Visionary Integrator. His other book, Traction, is also super awesome. And it talks about how to run weekly meetings, how to make sure you've got your alignment with your team and people are in the right seats, all of those kinds of things. So we've been obsessively putting that into our business over the last several months. We also recently read Clockwork as a team, which is kind of a similar style book, but it's all about automating systems. And so there's a few things that we can talk about that we've done that have really made a big difference for us. And
that's interesting. I'm glad you brought up EOS and Traction and some of those things. I know the listeners have heard those things many times. Different people we've had on the show, I've talked about it often as well. It's so important, right, that you follow some type of structure. There's many that would probably work for most entrepreneurs or businesses like yours or mine. But man, you got to implement something, right? And so follow some kind of system. And so, but I don't know that I've heard of that book that you just mentioned. You said Clockwork.
Yeah.
Is that similar to something like EOS?
Yeah, it is. It's I would say it's very complementary to EOS. I don't know that he references EOS at all in his book, but it's more about just automating your systems, making sure, I think his key concept that we really liked was he talks about this queen bee role with, you're in a beehive, the queen bee is the most important role and she needs to be protected at all costs. And so if she's not laying eggs, the whole hive suffers, right? And so in any business, you need to identify what is your queen bee role. And it's not necessarily a person, it's the role specifically, right? And then making sure everybody else is focused on that. So to give you an example for our business, we operate in mobile home communities. And interestingly, a lot of people think that you can take an apartment complex model and apply it to mobile home communities. And it's actually very, very different. And one of the main differences is the people in these mobile home communities actually own their homes, or at least generally they own their homes. So what we'll do is we like to buy mobile home communities that have maybe 60% physical occupancy, meaning if there's 100 pads, there's only maybe 60 homes in these parks. And of those, generally, some of those are old homes that are just completely worn down, and maybe some you're going to have to remove. Some you'll have to come in rehab, and then others you'll need to buy and bring in to get to that 100% physical occupancy. So homes is massive, and there's anything from tear downs, rehabs, buying, moving, selling, all those things are just huge, right? So we've determined, I think we could get a little more specific here, but we've determined homes is our queen bee role. And recently what we've kind of been realizing is we're not protecting that very much. It's very easy for us to say, okay, these 2 or 3 people that each have part of this homes, we keep giving them things that have nothing to do with homes. And so we're not protecting that queen bee role in that they're able to focus on the most important thing. So I think that was my biggest takeaway from the Clockwork book.
Okay. No, that's awesome. I appreciate you elaborating because I don't think I've heard of that book before. But I wanted to ask you, and I won't spend a ton of time here. I've talked about it a bunch on the show as well, but I'd love to know where you found these, quote, amazing VAs. Where did you source your VAs from? Because I get that question often as well.
Yeah. So kind of a couple different ways. We have a team of VAs that do underwriting for us. And then another team, or at least they do the initial underwriting. Obviously, we're doing the final stages of underwriting, but we have another team that does anything from bookkeeping to our property management software. They sort of oversee and manage. They even set up my bills. So I approve and pay all bills, but they're the ones entering the invoices into our systems. And honestly, the first ones that do our underwriting, I got really lucky there because they reached out to me on LinkedIn and I was impressed by some of what they were sending me. I looked at some of their underwriting models and, we did a trial run and they've been great. We've had other VAs where we've used Upwork to find them, and we've had some churn. We have probably gone through over a dozen VAs that way that haven't necessarily worked out, and one we actually had for over a year before we realized it wasn't working. So it's challenging to find solid VAs, but I would definitely say the more you can see upfront what the product is and do some trials and very quickly see if they're working out or not, the faster you're going to find the team that you need.
I've used them for a ton of different things. So it's interesting to hear. I'm using them for underwriting, right? But speak to, where did you find like VAs that can underwrite, or did you have to train them? Or how did that come about?
So this VA team, actually, they're based in India, and they reached out to me with the specialization of underwriting. So that's actually where their specialty is. And I mean, just to give you an idea, Whitney, normally we're paying $5-6 an hour for virtual assistants. We pay this team $25 an hour. So it's definitely a different skill set that we're paying for, but we've been extremely impressed. And they hadn't actually had mobile home community experience, so we did have to train them on how to underwrite that. And we had our own models we built for that, so we were able to show those with them, and they can, honestly, they save us tons of time. We're able to look at least 10 times as many deals.
No doubt. I mean, at $25 per hour, that may seem like a lot, but you're probably not employing them full time either, right? No. I mean, you're sending them deals as you have them. So and then that is a lot cheaper than hiring a full-time employee, right? Or numerous full-time employees, in-house. So that's incredible. Speak to the bookkeeping as well. How do you trust them with the bookkeeping? How do you share enough, with a bookkeeping team of virtual assistants? And what does that look like?
Absolutely. So that's, again, we're on our third VA for bookkeeping. So it's, it's very, you're not going to get the perfect person the first time. But I think knowing some of the language you need to be able to ask during interviews, understanding difference between just like even the basics, honestly, that you can find through some YouTube videos so that when you're coming in that this person knows what they're talking about. And again, just, using an example in the mobile home community space, we like to sell homes outright and we use third-party financing like mortgages, but inevitably, when you buy mobile home communities, you're often inheriting what are referred to as lease to own contracts. So what that means is the community owns the home still, and they're sort of selling it over time. Sort of they're essentially providing the mortgage to this resident. And so accounting for this is actually very complicated. So what I like to do in these interviews is I'll bring in an example of a lease to own contract and have the virtual assistant walk me through the journal entries of what that would look like. And even if they don't totally get it perfect the first time, because I've had CPAs not necessarily know 100% how to do it the first time because they've got to do some research. Seeing their thought process and understanding how they're going to do the research can be really enlightening on what they can handle. So I would say like coming in prepared with some very specific examples that someone can show you how they know what they're doing. I've seen resumes from VAs saying that they have the CPA equivalent in their country. And I'm sure a lot of times that's accurate, but it's hard to verify that. So really getting their experience. We have a CPA that we work with, obviously for tax purposes, and they've been willing to help us out with these interviews. I'm sure you pay for that time. So you would want to make sure that you're down to your final candidate before you're having somebody that's more experienced do that. But that's another way to just make sure you're getting a solid person. They know what
that is such a great suggestion there. Ask your CPA if they'll help you, at least provide you some questions, right? For your interview, if they won't be a part of it. I think that's a great idea. Well, I just wanted to dive in there briefly because I get tons of questions around virtual assistants and how we have used them to scale as well. And I love helping these people in other countries that, man, they were making $2 or $3 an hour. Now we can pay them 6 or 8 or even 10 or more, depending on their skill set. I mean, obviously it just changes their entire life, right?
Totally.
But it helps us in a big way as well, and just helps them and their family. So I love using them, if we can, if it makes sense. So, okay. So let's dive into systems a little bit. Obviously, a lot more about the systems that you're using than you did a year and a half, 2 years ago, right? And so dive into some of the systems maybe you're using now that you wish you had known 2 years ago, and maybe why, you're using some of these things.
Yeah, absolutely. So it's funny, I'm going to talk about these and you're totally going to just think this is common sense, and anybody would think this is common sense.
It's
but
not,
when you're in the middle of it, no, it's funny. When I was in business school, I would learn about these businesses that were suffering because they didn't know about the basic data. And then here I am running a business, and I see firsthand. Okay, it is hard to sometimes understand the data of your business and how your business is performing. So coming back to Traction, the book again, there's this weekly meeting he talks about that's kind of this level 10 meeting, the weekly pulse, right? And we've been just vigilant about enforcing that. And it's a standard agenda. So the 2 items I'll talk about from that agenda that I really like is, first, it's a scorecard review, and it's just a 5-minute scorecard review. So we now have a full-time analyst he'll run that 5 minutes, and he'll kind of talk about, here's our profit and loss, here's our collections, here's our vacancy and occupancy rates. And he'll highlight specifically where maybe we should be paying some attention to. And that really helps set the stage for that weekly pulse meeting, which is also setting the stage for the whole week. Just kind of understand where we're at for that.
So that scorecard review is specific to your properties and how they're performing.
Yes.
Okay.
Exactly. Yep. And then going into our weekly pulse, it's a 90-minute meeting, but 60 minutes of that is referred to as the issue, discuss, solve. So IDS section. And you focus on just your top 5 issues of the company. You always have this running backlog. We have this top 5 issues, and then the to-do items for how you're going to resolve those. And those 2 items are supposed to be done within 1 to 2 weeks. So for me, when we implemented this, we did this in December. We kind of had this like all hands, all day meeting where we kind of introduced it. And so we've only been doing it 6-7 months now. But for me, it was just a huge weight off my shoulders to see we've got the scorecard. I know that we're focused on the most important things every week. I'm hearing the updates. That was huge to implement. And then some of the other things we've done that I think have worked really well is tools. So I have actually noticed I'm in several Facebook mastermind groups, and people get passionate about their tools. So there are a lot of tools that work just fine. The one we've decided to use for project management, and honestly, a lot of our meeting structure is Trello. I've got a long project management history. So I will tell you, Trello is not the best for project management because it doesn't have like Gantt charts and dependencies and things like that. But what it is great at is it's super simple. I can give somebody access to Trello and not even teach them how to use it, and they know how to use it because it's just super simple to use. So
there's a ton of value in that right there.
Exactly. Yeah. Like ease is just, yes, exactly. So we use it for due diligence tracking. We've got our vision traction, our VTO, vision traction organizer stuff is all on there from EOS. So the weekly pulse meeting we do on Trello. We have a board where we track every single home in our portfolio. And we can have pictures in there. We have checklists of what rehabs need to happen, what the status of the sale is on the home. All those kinds of things are super easy for me to look up, and our whole team uses it. So that system has been really important to put in place.
That is awesome. Yeah, something, right? There's so many different systems. Like some people are so passionate about, no, this is the best one. But I think like a CRM or like most things, man, the most important part is that you're using one, right?
For sure.
And then you're going to figure out, what you don't like about it, or maybe what doesn't work best for you. Then you're going to hear somebody like Brett or myself on a podcast saying, man, I love this thing over here about what we use, and you may try it, right? But you got to use something. So dive in a little bit on you talked about, your standard agenda, level 10 meeting. You said the 5-minute scorecard review. I love that. And that it's ran, like the analyst, is responsible for bringing that part of the meeting, right? And so what about, you said 60 minutes though on IDS, is it 60 minutes total, and that's weekly? To speak to that cadence a little bit, and what else, how else are you running that meeting?
Yeah, for sure. So the whole 90 minutes, the whole meeting is 90 minutes total. The last 60 minutes of the issue is that IDS portion. And that's honestly probably the funnest part of it. But then the first 30 minutes, you're doing the scorecard review for 5 minutes. There's another 5 minutes where you just talk about your rocks, which are your major goals. And that's quick because you're just saying, is this on track? Yes, no. That's it. You're not going to detail at that point. If it's on track, great. If not, you create an issue to later discuss why it's not on track. And then you talk about highlights as far as like, what are the key things from customers or clients, or for in our case, we talk about our investors or our residents, things we need to know about for them. And so that's our leadership team weekly pulse. And then we haven't done this yet. We're starting to, but we have other sub meetings that are focused on operations and home sales. And we're rolling the same format into those meetings. So we'll be talking about even more granular issues that are specific to operations versus kind of more broad for the leadership team.
No, that's awesome. And I'm learning more and more about our meetings, and man, I have tons of meetings every week, right? And I'm trying to continue to be more focused during meetings, have a better agenda. It's a work in progress, right? And you don't want to waste your time or your employees' time, all right? And you want them to be very productive. So I appreciate how you're laying that out. I know that's helpful to the listeners also. And you being a tech guy as well, I want to ask before we move to some other questions, what other tech are you using that's like helping you on a daily basis, or helping you in your business, or helping you with communication with your team, or maybe even communication with your spouse or your 6 kids? Or, what's some like, man, I couldn't live without this tech every day, whether it's in business or personal life or both.
Our property management software is called Rent Manager, and it's pretty customized for mobile home communities, but it can do other assets too. It has multifamily, retail, industrial. You can do all of that in Rent Manager. And we just switched to it in March. So it was, we were on Buildium before, also great software. It just didn't have kind of the nuances we were looking for mobile home communities. And switching that out midstream was like replacing the engine on a Boeing 747 while it's in the air. Like that was super painful to do. But looking back, it's been great because the reporting is much better. Going back to what I was talking about, the lease to own contracts, how complicated those are. It's got bookkeeping built around that, which is pretty awesome. So just a lot of really cool things that have been great out of that. And then we use Slack for our communication, which has been great. We actually have a channel for every one of our communities. So the individual community managers in there, plus the specific people for the team, specific team members that are related to that group. And then the way we've structured our syndication so far has been portfolio based. So what we've got, for example, one pocket in Iowa of 5 communities, and then another pocket in Missouri of 4 communities. And so we have different GP partners in each of those portfolios. So we've got a Slack channel for those GPs just to kind of keep things a little bit more segregated. So we're able to do a lot on Slack, and then Trello has full communication in it as well. So between those 2 tools, most of our communication happens there. And then obviously, email is it's hard to get fully away from email. But I recently discovered an email tool that I love, and I've been like preaching it to everyone. It's called Spark, SPARK. And it's just super good at like, you've got snooze, remind me later, all those kinds of functionality are in there. They've just done it in a really clean way. So that's helped me with email.
We all need help with email. It's one of those things that it has to be done, but it's maybe not always the highest and best use of time, right? So there's a fight there between those 2 things. Now, that's so helpful. Appreciate you just elaborating on some tools there, because man, you probably know tech better than myself and most people listening. So I'm grateful for that. Well, Brett, I'm going to move to a few final questions. I know I love talking about scaling, love talking about those tools, and even the meeting cadence is so helpful. But I want to ask you, looking back now, I mean, you all scaled so fast. If you could talk to yourself 2 years ago or 3 years ago, man, what would you tell yourself? What would you wish you had known then that you know now? Maybe that would have helped you to scale faster, or maybe you would have gone into a different asset class, or maybe you would have, I don't know, moved into a different market, or left your job faster, or not got into real estate at all.
Yeah, no, honestly, the area I would have focused on is partnerships. Yeah. And there's sort of this gambit of what I'll talk to you real quick. So first, I got my start in as being a limited partner, right? And then stepping into a small GP role is just being mentored. And I would suggest anybody getting started out, that is an awesome way to learn, because you're hands-on. And also saying, Whitney, you touched on this earlier, every sponsor has stuff that someone that comes in that wants to participate can do. And I'd say most of us are willing to compensate with GP shares pretty readily. But then moving into the next thing that I've learned, this is sort of associated with that, is when you do bring on partners, even in a junior capacity, you really got to make sure you have alignment of interests set up. So we've learned that we can't just say, hey, you're a GP on this because you're co-signing the loan, you're helping us with the XYZ, and here's your shares. That doesn't really work for us because we've had people that, okay, well, this is my partnership structure. Have a good day, guys. Bye. And then we never hear from them again. So what we've started doing is more milestone based. So we'll sort of, and this is common in tech too, where you vest your shares. So we'll set up and say, okay, you, over the next 3 years, you can earn this many shares after you do X, Y, Z. And it's very, very specific. So they know, okay, if I hang around and I do these things, I'm for sure at the end of the day getting this. So that's sort of that structure. The other thing that, we've had some painful lessons on is bringing in co-sponsors where we need help with bigger aspects of a syndication that we're not necessarily structured to do just yet, just because we're still relatively newer. And we haven't had them put earnest money into the deal or help us out with pursuit costs with like surveys or legal costs or anything like that. And at the end of the day, there's not that alignment of interest because we've got a lot on the line with that money and they don't. So it's really easy for them to not necessarily bring the close. So really make sure you're setting up written agreements at the beginning of any partnership. Even if you're months out from a closing, it's good to have that alignment and make sure you've got very specific expectations for both sides of the partnership.
What do you expect, Brett, over the next 6 to 12 months to happen in our economy? I know you have all the answers. And so, no, but really, I know you don't, and none of us do, but still we're, all of us are basing decisions on whether we're buying or selling or all these things based on what we may think is going to happen. Right. And we're pulling information from all kinds of different places. How is that, where are you pulling that from? And how is that changing what what you're doing or, in the future, or what buying, selling, those things over the next 6 to 12 months?
Sure. Yeah. I think something that's on everybody's mind right now is rates, right? With the Fed every few weeks increasing rates. That's impacting residential as well as commercial. We actually have a large portfolio we put under contract in February when rates were in the threes, and now we're looking at high fives, maybe low sixes on that portfolio. And honestly, most of the quotes we've been getting have been floating rates, which is really risky in a market like this. So deals have changed a lot in the last quarter, I would say. So going forward, what I would say is people are going to really, I think, be hyper-focused on fixed rates. At least I know we are hyper-focused on that, or at least having a cap on a floating rate just to reduce that upside risk. I think we're going to still see some rate increases over the coming months, but I think that'll taper down later in the year. And so what that's going to do is I think cap rates are going to catch up with that. They're going to lag a little bit, but I think cap rates will start to catch up. And so we'll start to hopefully see some of these commercial prices soften up a little bit and be a little bit more reasonable. Because right now, I don't know about you, Whitney, but deals are just not underwriting like they used to. With the new
I thought it was just me.
No, definitely not just you. So I think something's got to change there. But in my opinion, it's short term. A lot of people are talking about this recession coming. I don't see that coming. I think we have a very resilient economy. We're in a very bit different place today than we were 12 years ago or 14 years ago in 08. And I just don't see the same thing happening that happened in 08. I think there's a lot of market conditions that exist now that didn't then, but I think things are going to soften up a little bit, maybe taper down, and then we'll hopefully see, I think we'll maybe see some foreclosures come on the market that make good deals for us.
Yeah. Well, Brett, you're on an investor call. An investor asks you, man, I want to invest with you in this project, whatever it may be. But Brett, how are you prepared for a downturn? When this happens, I'm an investor, I'm expecting the worst, in 6 months, whatever it may be. Brett, if that happens, how are you prepared for that?
Sure. Yeah. So there's a couple of things we do to be prepared. So first is the financing. We always try to have longer terms on our financing. I know a lot of operators are okay with 2 to 3 year terms and then they're forced to refi out. That scares me like crazy. So I prefer 7-year terms at least if I can get them. So that helps us out to have that fixed rate debt for as long as possible. And generally, by the time you're hitting 4 to 5 years, you've changed the value of that portfolio and the cash flow so much that even if your rates had to go up, you'd be fine because of that. The other thing we do is our cap rates when we buy, for example, if we're buying at a 6 cap, we never assume we're refinancing or selling at a 6 cap. We always expand it at least a point. So we'd be looking at 7 or 8% on refi or sale, just to build in that conservatism. I think when I look at sponsored deals, that's one of the first things I look at is the exit assumptions as far as the cap rates, because that's a really easy way to bolster your IRR. If you say you're going to sell at a 3 cap, for example, that's a massive difference to a 4 cap even, or even a 5 cap. So we look at that. We also, so for example, one of our properties, we just caught up on all of our preferred returns, and we're now at a point where we're cash flowing about 9 to 10%, but we're only paying out about 8%. And that's partially because of the economy right now. We're just wanting to make sure we have plenty of cash flow to just be in a good position in case something happens, right? The final thing I'll say, Whitney, and I know I'm this long-winded answer, being in mobile home community space, it's often referred to as a recession-resistant asset class. And I don't know if I'd go exactly to recession-resistant, but it's pretty close because if you think about it, people that are buying single-family homes that can no longer afford single-family homes, the next step might be high-luxury apartments, or it could be into a mobile home community. And so mobile home communities are sort of considered the bottom rung of affordable housing. But it's even a step above that because they're still owning their home. They're still building equity in their home. They have no immediate neighbors. They can park right by their house. There's a lot of benefits there that I think just make mobile home communities more resilient anyway.
What's your best source for meeting new investors right now?
Well, we do a lot of conferences. We're in a couple different masterminds, so we meet some investors that way. I think joining podcasts like yours, Whitney, obviously you've got a huge base. It's a great way to get introduced to people. Another area that we haven't focused on enough, but we have recently, is search engine optimization. So we have our website. We have actually a couple. We have one for our communities and then one for our investors. And doubling down on search engine optimization, I've seen people coming through that more and more are saying they're finding us just from Google searches. That's been helpful. And
I appreciate that. Masterminds, SEO, there's tons of different ways, but man, yeah, masterminds. I've heard so many people on the show talk about masterminds lately, and I couldn't agree more. Man, it's usually a great group, or when you can find a mastermind that's focused, right, and excelling and ahead of you and pulling you along, and maybe you're pulling others as well. It's very powerful. Brett, what are some of the most important metrics that you track? It could be professionally, could be personally, either one or both.
Mostly metrics we track professionally are related to our community performance. So we like to see collections, and calculating collections there are actually different ways to calculate it. Didn't even realize this based on like trailing or just the existing month, but collections is crucial. We also look a lot at home sales. So how fast are we selling homes? And then how fast are we turning around a home from like, we need to rehab it. We thought it would take 2 weeks. Is it taking 6 weeks actually to rehab it? Things like that to make sure we're measuring our contractor performance as well. And then looking at time to sale. And that time to sale is really crucial when we're building in the same market. So we like the markets we're in. And if we want to continue building up in those markets by buying more assets there, if we're seeing a time to sale that's longer than 2 to 3 weeks, that's indicating that maybe we shouldn't be doubling down in that market. So yeah, those are kind of our crucial metrics.
What are some habits that you are disciplined about that have produced the highest return for you?
One of the habits that helps me a lot is waking up early in the morning. And that means different things to different people. With 6 kids, early in the morning may not be the same thing as other people, but I like to be up at least an hour and a half before I need to go for meetings, have a nice breakfast, exercise, get ready for the day. And that just helps me mindset wise. I'm not a meditator, but doing that helps me kind of just think and it's my alone time because my kids aren't up yet. So it just helps me clear my space.
No doubt about it. I couldn't agree more, man. That time before kids are up, right? So important and structured. So what's the number one thing that's contributed to your success?
I'd say partnership model that I talked about before. Just not being afraid to partner, structuring the right partnerships, having the right partners has helped me a ton.
And how do you like to give back?
We like to give it back in our communities. So the main way we do that is by improving them through major capital returns like new roads, new sewer, new water, things like that, without increasing rents dramatically. So we are big believers that we are affordable housing, and we want to make sure that we keep it affordable.
Brett, I'm very grateful for your time. You've been very generous and transparent with how you've scaled and many systems that you've used to do that, and even hiring the VAs to the tech, specifically the weekly meetings and then the cadence of that and how the agenda. So helpful. Grateful for your time today. How can the listeners get in touch with you and learn more about you?
Absolutely. And well, it's been a pleasure meeting with you, of course. So I'd say the easiest way, our website's Suncrest Cap, short for Suncrest Capital. So suncrestcap.com. You can see Ryan and I on there. And then my email is just Brett, B-R-E-T-T, at suncrestcap.com.
Thank you for being a loyal listener of the show. Please subscribe and share it with your friends. We want to help you become the passive investor you've always wanted to become, but also the operator you've always wanted to become. We want to be the number one resource for your real estate investing journey. But go to lifebridgecapital.com where you can start investing in real estate today.